Hi everyone, this is Emma and welcome back to our continuing Attract Capital webinar series. I'm here with our host and CEO, Dave Barnett.
Hi everybody.
And the title of today's webinar is Tips for Building Mezzanine Debt Muscle. And Dave, what exactly do you mean when you refer to that muscle?
Mezzanine debt muscle, Emma, describes the transformative things that you can do when you have mezzanine debt funding. It includes acquisitions, it includes accelerated scale-ups, it includes improvement of working capital and liquidity. And essentially it describes those significant steps that you can take having this capital as part of your funding continuum.
Got it. Thanks for laying that out. So what are the most muscular things that you've seen some companies do?
Okay, so I've seen companies use mezzanine debt in lieu of equity. Instead of raising equity, which is more expensive, they use mezzanine debt, and they've done multiple acquisitions with it where they've scaled the size of their company tremendously. They've had what I would call two-way growth, where they've not only had acquisition growth, but they've also had accelerated organic growth. And many instances, we've had clients that have grown their equity value 30 to 40 fold after they were done with the entire program of mezzanine debt, which included subsequent acquisitions. So it does have this transformative ability, and it could really create large returns for independent sponsors and for companies.
And for companies willing to build this muscle, what tips would you give them in order to do so?
Okay, so the tips for building the muscle, it's always sort of the preparation and the regimen of focus that goes into it. So the tips would be, you want to have a very strong growth concept, knowing what you want to do before you even go out and raise the mezzanine debt. Do you want to acquire? Do you want to grow organically? Do you want to do both? It needs to be very specific, and it needs to be laid out in a lot of detail. Number two, you want to invest in having superior financial reporting systems so that you can track your profitability, track your revenue, and look at everything on a budget to actual basis. Number three, the growth should be natural. It should be either market growth, where you're expanding into a market, customer acquisition, or it should be operational capacity expansion. It should not be forced financial growth. We just want to get bigger for the sake of getting bigger. There needs to be an economic underpinning to it all. And fourth, you need to find a mezzanine lender that you can treat like a partner, that will enter into a relationship with you, who can support the life cycle of your needs through all the acquisitions and all the organic growth. So if you take those four things and you really start thinking about that 6 months to a year, 3 months to 6 months before you embark upon the mezzanine debt raise, then you're in a really good position to add mezzanine debt muscle and to really take a significant scale up once you get that mezzanine. You're really ready for it. And that's what we refer to when we describe it that way.
Well, that sums it up quite nicely. Thanks everyone, and we'll see you soon.
Thank you.